Welcome to TradeTheMBI.com. This is John. This report is for the 1st of February. Well, we got ugly DOC readings here. When we look at this, we've got, shorts on the rise. We've got short-term buyers on the down. We've got long-term buyers in the red DOC down. We've got green midterm buyers also down. We're below the 13.5 on the Power Mo 2. If that magenta tips up, you've got a clean full short signal from Power Mo 2, and we've already had that from Shakeout because we're still clearly negative. You've got the positive extreme back over here at the end of late November. That was around 35.70 range. Probably a little early for that one yet, but with these readings, we can expect that when these buys come under pressure, and this is often the case with decline. Sometimes they get real quick and rapid and they continue to excel, but with the liquidity that we've seen, you've got a lot of people buying every single dip. The problem will come when those dips don't quite pull back to the full level. So it's not usually the initial one. It's that pop-up if it isn't able to get back to the highs and or make new highs, then people start to get a little scared. Now you can see from a NASDAQ standpoint, only making it to the 50%, so a bit stronger, relatively speaking, to the S&P, which that's been the case for quite some time as tech has led the whole move, especially with the quarantines, and that those that have been online have certainly fared better than traditional marketplaces. And from a euro standpoint, still within the same range. Again, this is going to be the currency wars will be the next shoe to drop as central governments try and jockey for position on a weak global growth setup, and it's just going to create problems overall. Gold, again, without a spark of inflation, it's going to be difficult, but we'll keep an eye on oil because that will be the beginning of any kind of change. From an intraday standpoint, well, it was a wild day. We started off short. You had some little pops in between as the 100% decline. We finally reached the point where just the build of the DOC red just became larger and larger as it went, and finally moved back up to it. And it traded within a little bit of a range, but every time a short signal came in, it literally caught fire. We ended up with these long stretches of no DOC steel reset. The closest one was right here. We had this dip that came to the zero line, and as you got the dip of orange going back through there, zero interest, because I mean you were still way in the negative 13, and it just never even got to 23%. So it just continued to slide from there. It did finally build enough momentum where it was able to catch the buy a little bit later. Green popping up over here. This little brief one that took place right here was fairly close, but you ended up with the 32 dipped. Certainly a buy on that orange setup there, but you saw how quickly it spidered and flipped around for effectively nothing. So that's going to happen in those situations. It doesn't make it any less correct. It's just when you're in such a broad short, I usually have, I begin to use 50% as a trailing, because that usually becomes a harder mark to hit unless we get clear. Strong buildups where my shakeout is nearing that positive level. And that took place right over here, and that actually did lead to falling 100%, which just got us right back up to it. And then it was back and forth for most of it. When we reached the peak, we ended up with some more DOC spreads that fought their ways back in between, eventually filling that narrowing range between the Morganachis high and low, and you increase the scale. Now that we're at the end of the chart in our current after hours, and you can see what happened there. We ended up with the short going through. No real bonus on this turnaround move at all. I mean, it really wasn't able to get anything going because it immediately flipped. Even if you liked it on that spread right there with the Power Mo below the 13, secondarily you get it with the cross of steel going below and the orange spiking above, and that took us to new lows coming down Didn't take long, and usually I've talked about this when this kind of low breaks in an exaggerated way. Usually the press is to try and get back up to the old breakout point, which clearly was right up there around the 93. It happened a little earlier with the buy configuration, and then once it started taking off, you had just straight red DOC rising going through all the way, and then right as it was about to potentially show some softness, you ended up with your gold rising, and then once that took place, and you've got to wait until shakeout dips back below, and that hasn't taken place until a little bit closer over here. We started to get these DLC spreads on the breaks, and then we finally have much softer red DOC below the zero line. And so when those spike turnarounds of the cyan over green and that, you should get a little bit better response. But it's still +8 on the shakeout, so it hasn't really dipped to a negative. You were closest to it right here, but really didn't produce much downdraft at all. And that's just a little bit of that exuberance in that pre-market coming back. But positive extreme-wise, we began right about here, and also at the very beginning of the move down at the 3683. So actually I should just mark that now for you so that you'll see it. Get that one in place right there. Get the low off this bar. If I could get it to cooperate, it would be helpful. I have it on snap mode, so it goes to the lows and the highs, but it's not falling down below that one. That's okay. It's relative to it. What we'll be looking for, though, is how well the carry-through is when the market actually begins, and we're still a ways away from even pre-market action. So we'll get a pretty good idea and just go with the readings because, again, I'm expecting February. Well, I mean, it's already starting out. That's a pretty decent volatility move right there. So I think that we're going to get just a more continuation of that as sides develop imbalances, and then they just go with those imbalances, whether it's to the upside or the downside. The algos don't really care. They're just there to execute and really take advantage of those imbalances. As always, though, I will certainly keep posting. I posted the decline and started this up run on the Skype chat and will continue to do so. Trade well, and we'll talk again later.